This is where smart money is positioning right now, and most investors are still looking in the wrong place. In this video, I'm going to show you 3 dominant businesses generating massive free cash flow while quietly building the infrastructure behind artificial intelligence. These are not speculative plays. These are companies with real earnings power, deep moats, and the ability to compound capital through the next phase of the AI cycle. We are talking about platforms that control software ecosystems, data pipelines, and the hardware backbone that makes AI possible. Let's start with the first one. The first stock is Microsoft Corporation, ticker MSFD. Now, before we get into the numbers, you need to understand why Microsoft is one of the most important companies in the AI landscape. Because Microsoft is not just building AI, it is embedding AI into everything. And that distinction matters. A lot of companies are trying to create AI products. Microsoft is integrating AI directly into the tools that millions of businesses already use every single day. Think about that for a second. If you control the software layer that companies rely on to operate, and then you layer AI capabilities on top of that, you are not asking customers to adopt something new. You are upgrading what they already depend on. That is one of the most powerful distribution advantages you can have. Now let's break this down. Microsoft's ecosystem spans productivity software, cloud infrastructure, enterprise tools, and operating systems. Each of these areas creates recurring revenue. Each of these areas has deep customer integration. And now each of these areas is being enhanced with AI. This is not a side project. This is a full platform evolution. Now let's talk about Azure, because this is where a significant portion of the AI story is playing out. Azure is Microsoft's cloud platform. Azure continues to benefit from strong demand driven by AI workloads. Companies are not just using the cloud for storage anymore. They're using it for compute, for data processing, for running AI models. And all of that drives demand for cloud infrastructure. This is important because cloud infrastructure is where the real monetization of AI happens. It is not just about building models. It is about running them at scale. And Microsoft is positioned to capture that demand. Now let's connect this to free cash flow. Microsoft generates massive amounts of free cash flow, and this is what separates it from many other AI plays. Free cash flow is what remains after a company covers its operating expenses and capital expenditures. It is the money that can be reinvested, returned to shareholders, or used to expand the business. And Microsoft has a lot of it. This gives the company flexibility. It can invest heavily in AI development. It can expand its infrastructure, and it can continue strengthening its competitive position. Microsoft is not just benefiting from AI hype. It is converting AI demand into real revenue growth. That is a key difference, because in markets like this, there are always companies that talk about potential. But the companies that win are the ones that turn that potential into actual earnings. Microsoft is doing that. Now let's go deeper into the moat. Microsoft's moat comes from 3 main areas. The first is ecosystem lock-in. Once a company builds its workflows around Microsoft's tools, switching becomes difficult. The second is scale. Microsoft operates at a global level with infrastructure that is difficult to replicate. The third is integration. Microsoft can integrate AI across its entire product suite, and that creates a unified experience for customers. These advantages reinforce each other, and that is what creates durability. Now let me give you my personal take on Microsoft. This is not a speculative AI stock. This is a foundational AI company. It is positioned to benefit from the entire AI value chain, from infrastructure to applications. And because of its free cash flow, it can continue investing without compromising its financial stability. But here is the key. Microsoft does not need to grow at extreme rates to deliver strong returns, because its business is already large and highly profitable. So even steady growth can translate into meaningful compounding over time. Now, before we move to the second stock, let me say this. If this resonates with you, you're exactly who this channel is for. People who are ready to stop losing money in the market and take their investment portfolio to the next level. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. Now let's move to the second company, Alphabet Incorporated, ticker GOGL. And this is where things get very interesting. Because Alphabet is one of the most misunderstood AI companies in the market right now. Most people still think of Alphabet as a search and advertising company, but that is only part of the story. Alphabet is one of the largest data companies in the world. And in the age of AI, data is everything. AI models are only as good as the data they are trained on, and Alphabet sits on an enormous amount of it. Search data, user behavior, video content, maps, email, all of this feeds into its ability to build and improve AI systems. Now let's break this down further. Alphabet's core business generates massive cash flow through advertising. This cash flow is what funds its AI investments. And this is a critical advantage, because it allows Alphabet to invest aggressively without relying on external funding. Alphabet continues to show strong growth driven by its AI initiatives and cloud business. And this is where the story evolves, because cloud is becoming a major growth driver. Just like Microsoft, Alphabet is benefiting from increased demand for cloud infrastructure. Companies are moving their workloads to the cloud, and AI is accelerating that trend. Now let's talk about monetization. Alphabet has multiple ways to monetize AI. It can improve search results. It can enhance advertising targeting. It can expand its cloud offerings. And it can develop new AI-driven products. This creates multiple revenue streams. And that diversification is important, because it reduces reliance on any single business segment. Now here is where I want to add my perspective. Alphabet is in a unique position. It has the data, it has the infrastructure, and it has the financial resources. But it is also operating in a highly competitive environment, which means execution matters. The company needs to continue innovating. It needs to maintain its leadership in search, and it needs to expand its cloud business. If it does that successfully, it has the potential to remain a dominant player in AI. Most people still frame Alphabet as a search company, but what is clear is that Alphabet is evolving into something much broader. It is becoming an AI-driven ecosystem built on three core pillars: data, distribution, and infrastructure. Let's start with data. Alphabet processes an enormous volume of information every single day. Search queries, user behavior, video engagement, location data, email activity. This is not just big data. This is real-time, continuously updated data at global scale. And in AI, data is the raw material. The more high-quality data you have, the better your models can become. This gives Alphabet a long-term advantage that is very difficult to replicate. Now let's talk about distribution. Alphabet owns platforms that billions of people use daily. Search is integrated into everyday life. Video consumption is a core part of digital behavior. And these platforms create a direct connection between Alphabet and its users. This matters because it allows the company to deploy AI features instantly at scale. When Alphabet improves its AI capabilities, it does not need to find new users. It enhances the experience for users it already has. That is a powerful advantage. Now let's move to infrastructure. Alphabet's cloud business is becoming a key growth driver. Demand for cloud services is increasing as companies invest in AI. This is similar to what we discussed with Microsoft. But there is an important distinction. Alphabet is building its cloud business while leveraging its strength in data and machine learning. This creates a different positioning. It is not just competing on infrastructure. It is competing on intelligence. Now let's talk about free cash flow. Alphabet generates massive amounts of free cash flow from its core advertising business. And this is what allows it to invest aggressively in AI. Unlike smaller companies that rely on external capital, Alphabet can fund its own growth. This gives it resilience. It gives it flexibility. And it gives it the ability to take long-term bets. Alphabet is not just investing in AI for the sake of innovation. It is integrating AI into its existing revenue streams, improving search relevance, enhancing advertising efficiency, expanding cloud capabilities. This is where the real value is created, because instead of building entirely new businesses, Alphabet is upgrading its existing ones. And that leads to more efficient monetization. Now let me give you my personal take on Alphabet. This is one of the most powerful free cash flow machines in the market. It has the resources to invest. It has the data to build. And it has the platforms to distribute. But it also faces a challenge, because expectations are evolving. Investors are no longer just looking at its core business. They are evaluating how well it executes in AI. And that means the company needs to continue delivering innovation while maintaining its core strengths. If it does that, Alphabet remains a dominant long-term player. Now, before we move to the third stock, I want to share something with you. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now let's move to the third company, Broadcom Incorporated, ticker AVGO. And this is where the story shifts from software and platforms to the physical backbone of AI. Because while companies like Microsoft and Alphabet operate at the application and infrastructure level, Broadcom operates at the hardware level. And that is just as important, because none of this works without the underlying chips. Now here is what makes Broadcom interesting. It is not trying to be everything. It is focused on high-value segments of the semiconductor market, networking chips, custom silicon, infrastructure software, and these areas are critical for AI. Let's break this down. AI workloads require massive data movement. Data needs to be transferred quickly and efficiently between systems. And that is where networking chips come in. Broadcom is a leader in this space. It provides the components that enable high-speed data transfer within data centers. This is essential for scaling AI systems. Now let's talk about custom silicon. As AI workloads become more specialized, companies are looking for customized solutions. Broadcom works with large customers to develop chips tailored to their specific needs. This creates deeper relationships, and it creates recurring demand. Broadcom is benefiting from strong demand in AI-related infrastructure, and this is translating into revenue growth. But what really stands out is its free cash flow. Broadcom generates significant free cash flow, and this is one of its biggest strengths. Because just like Microsoft and Alphabet, it has the financial power to invest while still returning value to shareholders. Now let's talk about its business model. Broadcom combines semiconductor products with infrastructure software. This creates a more diversified revenue base, and it reduces reliance on any single segment. Now here is my perspective on Broadcom. This is a company that operates behind the scenes. It is not as visible as software companies, but it is just as critical, because it provides the physical components that make AI possible. And in many cases, these components are not easily replaceable, which gives Broadcom pricing power. Now let's connect all three companies. Microsoft controls the software layer and enterprise ecosystem. Alphabet controls data and distribution. Broadcom controls critical hardware infrastructure. Three different positions, one shared advantage. They are all essential to the AI ecosystem, and they all generate strong free cash flow. Now here is something I want you to think about. Free cash flow is what allows companies to survive and grow. It is what allows them to invest. It is what allows them to adapt. And in a fast-changing environment like AI, that flexibility is critical. Now this is where everything starts to click. Because once you step back and look at all three of these businesses together, you begin to see a very clear pattern. These are not random AI stocks. These are companies that sit at critical control points within the AI ecosystem. Microsoft Corporation controls the enterprise software layer and cloud infrastructure where AI is deployed. Alphabet Incorporated controls data, user distribution, and one of the most powerful monetization engines through search and advertising. Broadcom Incorporated controls key hardware and networking components that allow AI systems to function at scale. Three different layers. One unified theme, control. And this is something I want you to really understand. Because the companies that control key layers of a new technological shift are the ones that tend to capture the most value over time. Now let's talk about why free cash flow matters so much in this conversation. Because this is where these companies separate themselves from a lot of other AI plays. Free cash flow is not just a financial metric. It is a strategic advantage. It allows companies to invest aggressively in growth without putting their balance sheets at risk. It allows them to acquire new capabilities. It allows them to weather downturns. And most importantly, it allows them to compound. Now think about this. A company that generates strong free cash flow can reinvest that cash into expanding its business. That expansion leads to more revenue, which leads to more free cash flow. And that cycle continues. That is how compounding works. And all three of these companies are positioned to benefit from that cycle. Now let's bring this into a long-term investing framework. When you are looking at these businesses, you are not trying to predict what the stock will do next week. You are trying to understand how the business will evolve over the next 5 to 10 years. And when you look at it from that perspective, the picture becomes much clearer. Microsoft is building an ecosystem where AI becomes a core part of enterprise productivity. Alphabet is enhancing its existing platforms with AI to improve monetization and user experience. Broadcom is enabling the infrastructure that makes all of this possible. These are not temporary trends. These are structural shifts. Now here is something that I think is very important. Each of these companies benefits from AI in a different way. Microsoft benefits from integration. It embeds AI into products that businesses already rely on. Alphabet benefits from data and monetization. It uses AI to improve its core revenue streams. Broadcom benefits from infrastructure demand. It supplies the components needed to scale AI systems. And this diversification matters because it reduces your reliance on a single outcome. Now let's talk about risk, because no investment is without it. For Microsoft, the risk is execution. It needs to continue integrating AI effectively and maintaining its leadership in enterprise software. For Alphabet, the risk is competition and adaptation. It needs to evolve its core business while expanding its AI capabilities. For Broadcom, the risk is demand cycles. It operates in a hardware-driven environment that can be influenced by industry trends. But here is the key. All three companies have strong fundamentals. They have established positions, and they generate significant free cash flow, which means they have the ability to adapt. Now let me give you my personal perspective on how to think about these companies. Microsoft is the foundation. It provides stability and consistent growth. Alphabet is the engine. It drives innovation and monetization. Broadcom is the backbone. It supports the infrastructure that enables everything else. And when you combine these roles, you get a powerful framework for long-term investing. Now I want to challenge you with a question. If you had to build a portfolio around just one of these companies for the next 10 years, which one would you choose and why? Would you choose Microsoft for its integration and stability? Would you choose Alphabet for its data advantage and monetization power? Or would you choose Broadcom for its role in enabling the entire ecosystem? Let me know in the comments. Because this is where real investing starts. Not with quick trades, but with understanding. Now before we wrap up, I want to share something with you. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. At the end of the day, the goal is not to chase every new trend. It is to identify the companies that are positioned to benefit from those trends over time. And right now, artificial intelligence is one of the most important trends shaping the future of the market. The companies that control key parts of that ecosystem are the ones most likely to create long-term value. Microsoft through integration, Alphabet through data and distribution, Broadcom through infrastructure. 3 different paths, 1 common outcome, compounding. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.